Hello, this is Nick Rach with the Earnings Scout, and I'm going to review Oclaro's earnings estimate and price revision trends over the past year and two to determine if this is a stock you want to own or if it's time to sell. And why I say is it time to sell, because when you look at the chart here, the blue lines on our screen here are going to be measuring the changes to Oclaro's earnings estimates over the past year. The red line is the price, and if you look here, drawing in the trend line for the price, this stock is up over 253% over the past year, so it's just caught on fire. So when we're looking to do our evaluation here for the stock, is it time to ride the wave or is it time to sell for Oclaro? If you haven't been in the name, we're going to do the evaluation of the earnings estimate trends to try to see what kind of indication they're giving in terms of owning the stock. So now as we look at the chart here, we're going to give you a quick and easy view. If you didn't want to do the evaluation of the earnings trends that we're going to do here for you, we have an indicator score for you. We do the math. We give it a 4 out of a possible best 100. That is a sell on the stock. This differs tremendously from most earnings revision models because over the past year here, we're going to show you how earnings estimates have continued to go up for Oclaro. And traditional earnings momentum love this stock, but we're going to say they're going to be trying to get you to buy high and hope it goes higher. That's something that we don't want to capture, and we're going to show you why we say sell. By doing so, we're going to evaluate the earnings revision trends for Oclaro over the past 2 years. And when we look at here, we showed you what the red line was doing in the chart. The earnings score itself, this is a proprietary calculation that we come up with that measures the rates of change to OCLR's overall earnings expectations over multiple time series. When we draw the line in here, that's the 0 line. When you're above this line, that means just simply on an absolute basis, Oclaro's earnings estimates are rising. And if you look over the past year, the earnings estimates were going up. Now back in 2014 and 2015, we're below the line. That means earnings estimates were getting cut. However, when you do look at this, I want to show you how it's being calculated. When this period here that's flashing on the screen, this is August 2nd. That's when Oclaro last reported earnings. And when a company reports earnings, that's typically when we get the revisions that come in. That's why you see what's going on here. That it looks like a spike up in the earnings estimates, and then it drifts back down. Now, let us explain what's going on there. So on August 2nd, when the company reports, the day after the earnings estimates, once all of the analysts make their revisions in, it goes up to 10 cents for its September quarter. Before that report, 90 days prior to that report, the estimate was for a nickel. So that's a 100% increase in earnings expectations for the Q1 estimate change after the company reports its June quarter in August. Now, if we were only looking at the 90-day Q1 estimate change, the earnings score would be 100%. So we just want to explain the logic. We're looking at more than just the Q1 estimate change over 90 days. We're looking at over 30, 60, 90, 120 days. And we're looking at multiple quarters, multiple years. Not an equal blend, but a proprietary blend that we're trying to say, how are the overall earnings expectations moving for Oclaro? So if we look at the fiscal year 17 estimate, while the Q1 estimate went up 100%, the FY1 estimate, the FY17 estimate for Oclaro went up 55.26%. So this blend, you can see it's near that 100% range, just a little bit below. But as we look at this, that's trying to give you the logic of what we're applying. So now if we go back to 2 years, we'll take that out. I want to show you the trend to the earnings estimates over the past 2 years. We loved Oclaro stock. We were getting into this stock back in 2014 in the $2 range. And we like it when the earnings estimates were rising at increasing rates. In other words, the earnings estimate trends were improving. But if you take a look at what's going on here, really since March 2016 when the earnings peaked, and look at the stock price here, 481% return over the past 2 years. Even better than the 253% gain. So this stock has been not only on fire last year, this has been on fire for the last 2 years. But take a look at what's going on to the earnings trends over the past 9 months. While they are still going up on an absolute basis, positive earnings score means the earnings estimates are going up, but the magnitude by which they're going up is starting to slow. So we're starting to catch this momentum slowing while the price keeps rising. This divergence here allows us to spot that the momentum may have shifted. And what happens here is the sell-side analysts that love the stock, what they have to do to justify a 481% rise in price over the past 2 years, have to raise the bar on expectations higher and higher to justify the price. In other words, it becomes harder. Those obstacles become higher hurdles to clear. And then slowly across time, we start to see the momentum wane. And that's exactly what's happening in the case of OCLR. The earnings estimates are still going up on an absolute basis. Traditional momentum models are going to love that because relative to everything else in the databases as they calculate their ranking systems, most companies are seeing earnings estimates fall. So Oclaro, that it's actually having earnings estimates go up by this magnitude, looks very good relative to everything else. However, relative to itself, you're failing, the traditional momentum models are failing to see how Oclaro is losing momentum. It's losing steam. And in this case, because of that, we think there's better opportunities here, and there's no margin of safety because of this divergence that's continued to price in improving earnings estimates that are starting to lose momentum. So with a decreased margin of safety, we say sell from the earnings standpoint, even though earnings estimates are still going up. We think this company could continue to lose momentum here, and it could be just a matter of time before those earnings estimates start to get cut. And for a high momentum, price momentum, high earnings momentum stock, whenever there's a disappointment, it could be look out below. So that's why we say sell on the stock. If you like what we see here for Oclaro, how we did our earnings trend analysis for this, for a company, this earnings estimates are going up and we're saying sell, that completely differs from people on the street who are using traditional earnings analysis. Contact our sales and marketing team here at the contact information below, or you can contact us at sales@earningsscout.com. We do this analysis for 4,500 other companies and also for every sector and industry within the economy. Thanks for listening and good luck investing. Thank you. Bye.